Buying a restaurant with seller financing. 10 tips to secure the deal. You're buying a restaurant. While many buyers turn to bank lending, there could be several reasons why this may not be right for you. For example, perhaps you are concerned about interest rates or fees associated with lending. Maybe you want to structure the note differently in order to build earnings. There are a number of reasons to seek seller financing instead of traditional bank lending for buying the restaurant. Seller financing might be your smartest move, and it's exactly what it sounds like. Instead of going through a bank, the seller acts as your lender. That means you pay less out of pocket, skip the lengthy bank approval process, and gain a valuable partner, because now the seller has a financial interest in your success. But seller financing isn't automatic. Not every seller will say yes, and not every deal qualifies. So here are 10 expert strategies to increase your odds of landing a seller finance deal. But always ask for seller financing. What's the worst they can say? The golden rule of financing is this: always ask. Any amount that a restaurant seller is willing to finance can dramatically reduce your upfront capital requirement or the cost of the lending. I have never seen one accepted. Some seller financing may be reasonable, but 100% seller financing is not. 2. Build a relationship before requesting seller financing. Seller financing is based on trust. If you have never met the owner in person or by phone and he knows very little about you, they are unlikely to provide you with a loan. That's why you should spend time actively listening, asking smart questions, and showing genuine interest in the restaurant business. Overall, sellers are interested in 2 outcomes: time and money. If you can flex to his timing, that may overcome your ask for financing support to make the deal work. Overall, this isn't just about paperwork, it's about building rapport. 3. Understand and reduce seller risk. When buying a restaurant, when a seller says no to financing, it's usually because they're imagining worst-case scenarios. Will the buyer default? Your job and the job of your certified restaurant broker is to listen, understand a seller's concerns, and propose solutions. In almost all instances, a restaurant buyer should be prepared to offer a personal guarantee which gives greater security to the restaurant seller. In addition, plan on a UCC lien being placed on the business until the note is paid off. Providing references or a credit report that demonstrates on-time payments to vendors is very helpful. These are strategies that de-risk the deal for the seller and makes him more likely to say yes. 4. Pay the asking price when asking for financing. When negotiating for a restaurant, there are really 2 things important to the seller. One is price of the restaurant. The second is timing of the deal. If you are asking for seller financing, it's best to be very close to the asking price. If you ask for both items, you may be perceived as being aggressive or disrespectful. You can still negotiate terms to be favorable to you, even if you are paying a slightly higher price overall or higher multiple than you intended. Negotiating a favorable interest rate or a longer repayment window are both strategies that overcome any additional valuation. Not having to pay loan origination fees, guarantee fees, and wait on the financing approvals and paperwork can make it worth paying more for the deal. Consider all the possible strategies for financing the deal, including amortizing over a longer period for a lower payment with a balloon at the end, a larger payoff. You can try deferring payments at the outset to give you time to grow the business and the cash flow. Overall, everyone needs to feel a win in the negotiation. You get owner financing and flexibility. They get their number. Everyone walks away satisfied. 5. Develop a business plan. You can't get traditional bank lending or SBA lending without a business plan, and owner financing this should be treated the same way. Share your transition plan, operating vision, and financial projections and your menu. Especially if you are making any changes, include all your background and experience. Provide references, especially if you've managed operations for other restaurant owners. Demonstrate that you are responsible and know how to manage the full operations. At the same time, be humble and ask the seller's opinion. You want him to be part of the discussion, and this will help overcome some barriers. Overall, be prepared to answer. Why are you the right person to take this restaurant forward? A well-thought-out presentation builds confidence and can make the seller more willing to finance part of the deal. 6. Include throwaway terms. Sellers like to feel like they're negotiating a win. One way to do this is to include some throwaway terms. These are items you are willing to concede later. Maybe you offer a higher interest rate initially or propose additional collateral, then agree to remove them during negotiations. Be aware that the seller may offer throwaway terms as well, like additional training or consulting services after the sale. These are small gestures that build goodwill and get deals across the finish line. Jargon. Have a fallback position. What if your initial offer for buying the restaurant is declined? Be ready with the second offer. Maybe the seller won't do 5 years at 7%, but they might agree to 3 years at 9% if the note is personally guaranteed. Your certified restaurant broker will help you establish strategies to get to a successful negotiation. Above all, remain flexible. Showing flexibility keeps the conversation going and signals that you're serious about making the deal work. 8. Lead with understanding, not jargon. Throwing out financial terms and seller financing stats won't build trust. A former investment banker trying to offer deal terms and throwing out terms like basis points won't win the deal. What will? Listening. Start by asking what concerns the seller most about offering financing, then tailor your offer to resolve that specific issue. Remember, knowledge is knowing the terms. Wisdom is knowing when and how to use them. 9. Get creative with the deal structure seller. Financing isn't one size fits all. If a seller is hesitant, propose options like a phased ownership transfer, performance-based incentives, for example, bonuses if revenue targets are hit. Flexibility increases the chance of finding a deal that works for both parties. 10. Use a certified restaurant broker to guide the deal. Working with a certified restaurant broker can make all the difference. Brokers understand how to structure seller financing deals that protect both parties, and they often know how to position the ask in a way that resonates with sellers. Seller financing isn't guaranteed, but it's a game changer when it works. Less cash up front, more collaboration, and a seller rooting for you. With preparation, persistence, and a personal touch, these 10 tips can turn a no into a handshake. Ready to buy that restaurant? Start asking, start listening, and start winning.